Assalamualaikum, we are from Group 2, we present topic 4 Audit of Cash. I am the first presenter. My name is NURFATEHAH BINTI matric number 273695. We present about the introduction and also the conclusion. Auditing cash includes cash in hand, impressed petty cash balance or account and bank balance. In the audit of cash, the inherent risk of cash is evaluated as high risk because the nature of cash has several risky elements such as high volumes, high liquidity, debt convenience, and also can be manipulated. Before performing the audit of cash, we need to understand the internal control first by performing a walkthrough of the process, making an inquiry to the client personnel, observing the control procedures, and also inspecting the supporting documents. Next, we will perform the audit procedure, which is the bank confirmation, bank reconciliation, and also inquiry to the management regarding the any cash requirement or restriction from debt agreement. The bank confirmation procedure is a requesting verification or confirmation from a third party, which is the bank, on the company's cash accounts and balance at the bank. Meanwhile, bank reconciliation compares the cash balance on the bank statement to the cash balance in the accounting record. In audit of cash, we have audit assertion for cash, which includes first, existence, means the cash balance on the balance sheet really exists at the reporting date. Second, completeness, means cash balance include all the cash transactions that have occurred during the accounting period. Next, rights and obligation, means the company has title to the cash accounts as of the reporting date. Furthermore, valuation or allocation, the recorded balance reflects the true underlying economic value of the cash and the cash equivalent. Lastly, presentation and disclosure, means the cash is properly classified on the balance sheet and adequate disclosure has been made in the notes to the financial statement.
Next is the uncredited deposit. The uncredited deposit is the fund that have been deposited to the bank account but not yet to be credited by the banks that usually take 1 or 2 working days to be credited. Moving to the imprest account. An imprest account is a cash account used by a company to pay for small regular costs. Imprest funds are restored but on a regular basis to maintain a constant balance. When the fund is depleted of cash, an approved voucher is deposited in the petty cash box to replace it. The last one is the materiality and risk. Materiality is determined by analyzing how much of a unit's financial data might be incorrectly reported due to a mistake or corruption without impacting the action of reasonable financial information users. The quantity of cash moving through the account over time, on the other hand, it is typically bigger than any other account in the financial statement as cash is critical to the business long-term survival.
My name is SHAFIKA HUSNA, BINTI AMRI, number matric 273692. I will continue this presentation about cash fraud that will happen and need the audit strategy to avoid this from happen. The auditor should be alert of the possibilities of fraud when auditing the cash balance because cash is more vulnerable to fraud than other assets. The inherent risk is massive. Kiting and lapping are two forms of common cash-related fraud. They are techniques of misrepresenting the company's actual cash status. Next is kiting. Kiting is the fraudulent use of a financial instrument to gain unapproved additional credit. For instance, recording a transfer as a deposit in the recipient bank while failing to reflect a deduction from the account from which the transfer check is taken. Check kiting is performed by exploiting the float or the time it takes for a check deposited in one bank to be physically presented for payment at the bank on which it was drawn. Kiting occurs when a check drawn on one bank is deposited in another bank with no record of the disbursement in the first bank's balance. This is the sign of kiting that auditor must aware which is signature and payee on kite checks are often the same. Every abnormalities, deposit checks, and balance inquiry on a regular basis. Customers who frequently inquire about their account balances, escalating bank irregularities, and the average amount of time money remains in an account is brief. Next is lapping. Lapping is the action of not registering cash or check receipt. Lapping occurs when an employee steals money by diverting a payment from one customer and then conceals the theft by diverting money from another customer to offset the receivable from the first. Lapping is simply accomplished by assigning authority, custody, and recording to a single individual. This is highly common in a small business where a bookkeeper may be in charge of all accounting tasks. Next is prevention and detection of lapping. Customers should be sent statement by someone other than the cashier. On a regular basis, audit cash receipt transaction. Account receivable days should be tracked throughout time. Ensure that all accounting workers, without exception, take all their vacation time. Confirm accounts receivable on a surprise basis at an interim date. Control the use of credit memos. All checks should be marked for deposit only so that staff cannot deposit them into their own accounts. Make a surprise cash account. Lastly, compare the specific of cash receipt notebook entries to the specific of daily deposit slips.
And hi, my name is FIFI AIRINA SYAZWINA, matric number 273668. So I will proceed the presentation with the bank reconciliation and bank confirmation. So we will go through to the bank reconciliation. The definition of bank reconciliation is the process of auditing in cash which usually been performed by auditee or client at the end of the month. Meanwhile, auditor will perform it once a year. It is a process of detecting the differences between the bank balance shown in auditee's bank statement and the amount shown in auditee's own accounting record. So these are the differences in bank reconciliation statement which can be divided into two. The first one is the causes of differences and the second one is the items that cause differences. So the causes of differences usually because of the error from the bank or auditee itself, and secondly is the lapse of time while recording an entry. So the items that cause differences is outstanding checks. Error happens when the auditee or company issued checks that have yet to be presented to the bank for payment. Next is the deposit in transits. The auditee usually records the cash received and then pays it to the bank, which bank will not record it until the following months. So these are the procedures of bank reconciliation. First, auditors must check on and reconcile the balances on the bank statement that has been stated on the reconciliation to the bank statement and the balance shown on the bank confirmation letter. Next, auditors need to test arithmetic. Next, examine the bank reconciliation from the previous period to see if any items were cleared or carried over to the current period. Auditors need to check to confirm if adjustment and reconciliation items are appropriately accounted for by tracing and verifying them. And lastly, auditors need to trace and check on items, verify if they have been cleared after the year. So I will proceed with the bank confirmation. So what is bank confirmation? Bank confirmation is the part of procedures for audit of cash that is sometimes used for any business financial inquiries. Bank confirmation, which will be in the form of letter, is a must to ensure the existence and completeness. So why do auditor needs to perform bank confirmation? First is for accuracy. It involves direct confirmation of bank balances, which includes the third-party proof that is transparent to the auditor. It's also secure, which is the details of security, borrowings, and contingent liabilities may be revealed in the bank letter, which next need to be disclosed in the financial statement. Next, before auditors send the bank confirmation to the bank, there are a few things that need to be considered, which is the first one is the format of letter. Next, auditor needs to ensure that clients' accounts are circularized at all banks, and auditor needs to sign the authorization completely. Balance of the bank account should be agreed to the fixed items and send a second request if no response from the bank. So these are the process of bank confirmation. We will start with the management of the auditee or client give the auditors all the bank balances that reported in the financial statements of a business. Then auditor needs to submit a bank confirmation letter to each of the banks already. So once auditor have received the bank confirmation letter from the bank, check whether all the inquiry requested for confirmation are in the letter. So that's all from me.
My name is NURFATEHAH binti ABDUL and my metric number is 273 and 652. So today I will be present for my part, which is substantive procedures for cash. According to the accounting, substantive procedures are intended to generate evidence that an auditor can use to support the assertion that an entity's financial records are complete, valid, and accurate. As a result, an auditor conducts substantive procedures to determine whether any material misstatements exist in accounting transactions or not. There are some possible substantive procedures for cash. First and foremost is completeness. It is to identify all banks with which the client does business, send back confirmation letters, and reconcile account bank balances with general ledger and financial statement balances. Next is rights and obligations. It is to determine whether the entity has a legal ownership of the cash and bank balances. Apart from that, checking bank balances from the general ledger to bank reconciliations, bank statement, and bank confirmation letters also is one method. The third one is valuation and allocation. It is considered whether the cash and bank balances are included in the financial statement at appropriate amounts. Also, it needs to review bank reconciliation and check subsequent clearance of unpresented check and uncredited lodgements. Last but not least is classification. The auditor determines whether the cash and bank balances have been recorded and classified it properly or not. Next part is test of details of transactions. The auditors should check the mathematical accuracy of all schedules given by the client and ensure that the carry forward amount of cash in the system is the same as the audited figure of the previous year. The auditor then performs the test of details of transaction and balances. Test of details of transaction consists of cash type of test and also tracing bank transfer. When perform the testing of details of balances in cash auditing, the auditors may do these three ways. The first and foremost is confirming bank balances and other arrangements. The auditor make a bank confirmation request directly to the bank, which is to obtain information concerning bank balances or other arrangements such as overdraft and loan facilities. The second one is verifying bank reconciliation. This test ensures that the balance confirmed with the bank corresponds to the balance in the client's record. The correct cash balance at the end of the reporting period is created by testing or preparing a bank reconciliations. Last but not least is counting cash in hand. Cash in hand includes undeposited cash received and change funds. To conduct an appropriate cash count, the auditor must control all cash and hold all accessible instruments until all funds have been counted, obtain a signed receipt from the custodian on the return of funds, and ensure that all undeposited checks must be paid to the entity's order, either directly or through endorsements. So that's all from me.
Now I will continue with the developing audit plan. My name is SITI NABILA binti ROSLAN and my matrix number is 273702. Before choosing the most successful cash audit plan, it is necessary to develop the audit plan to test the quality of control measure designed to guarantee that balances are recorded correctly and accurately using an impress account and frequent bank reconciliation. Materiality and risk should be considered before determining the factors applicable to an effective strategy for auditing cash. Next is the cash for safekeeping. Although the auditor take a mainly substantive approach when reviewing cash balance, a knowledge of the system that provide financial accountability is required. The usage of impress account and independently completed bank reconciliation are the main procedure of cash for safekeeping. Next is the unpresented checks. These are checks issued by the entity that were not cleared at the end of the month and will be reconciling items on the bank reconciliation statement. To confirm that unpresented check is cleared before year end, they should be taken from the bank reconciliation and traced to the subsequent bank statement.
So we arrive at the conclusion audit of cash. Substantive procedure, which include test of details of transaction, test of details of balance, confirming bank balance, verifying bank reconciliation, and auditing cash in hand, can help in auditing cash successfully. The advantages is to avoid the cash mismanagement in the form of keeping and lapping. So the lesson that we can learn is cash balance are usually relatively small but significant, given it is important for liquidity of entity. That's all from us. Thank you for listening.